I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down, much more than the stock market is. And it does not yield the net return. The average annual rate of return on gold sucks.
Oh, it's a golden rock. Woo!
So because of everything that's going on right now in the economy, people are asking, should I be investing in gold now or should I always be investing in gold? And the answer is I've always been investing in gold. It's the long-term strategy. I invested in gold when it was much lower and now it's gone up by quite a bit. But in some respects, think about this. If you have extra currency and you want to keep your store of value, you can see that the value of the US dollar is falling. And so you want to get your value, your US dollars, out of the USD and into a more stable currency. That's the idea of gold. And so when you are investing in gold, then what you're doing is you're taking your US dollars that are in free fall and you're stopping it. It's like, boom, you just stopped it from falling. Think about how popular gold has gotten that you can go into Costco and you can buy gold bars. I got a 10-ounce piece of gold right here. I love investing in gold. And so this is Swiss, which is actually the same brand that Costco has in their stores. You can also get these Valcombe breakoffs. If you look very closely at this, you can actually twist these, you can actually bend these and break them off for little 1-gram pieces of gold. The reason why gold has been used by central banks throughout history is because gold is difficult to get more of. So if you have a central bank system and you have a certain amount of money in the system, it's hard to add a lot more if you have to go and buy gold. Now, if you're in a system like we have today where you could just hit numbers on a computer and add more, then it's really easy to add more into the system. So the idea of having gold as backing our money system is a very sound concept. Actually, our Constitution says that we should be using gold and silver as our money. And so if the Federal Reserve was to use gold and silver, it would take away a lot of the power that the Federal Reserve has. Why would you want to chain that to the amount of gold you have? Wouldn't you rather just be able to make up money out of nowhere, which is exactly what the Federal Reserve does? But let's look over time. From 1980 till now. In 1980, there was $1.5 trillion in the entire money system. Then, by the 2000s, there was $4.7 trillion in the total Fed system. By 2010, we were up to $8.6 trillion. Then 2020, we were at $15.4 trillion. This is a massive increase. And then fast forward to today, where we are at $21 trillion in the economy. So this is a noticeable acceleration in the growth of the money supply, especially since 2008. And guess what? It doesn't grow back. When you lose through inflation, you don't ever get it back. We're never going to get back the prices that we had in 1970. We're never going to get the prices back that we had in 1990. No matter what the Federal Reserve does to combat inflation, we're never going to get back the prices of 2000. They can't undo inflation. All they can do is slow it down. They even tell you that. They have a 2% year-over-year target, and it happened to get much higher over the last couple years. But rest assured, guys, they've slowed it down to 2%. If you guys can read between the lines and see what this means, it means that if you have extra US dollars, then take them and convert them into a sound store of currency. It's up to you to decide what one of those sound stores of currency are. We can see that the US dollar is not that. It can't possibly be because it's lost 98% of its purchasing power over the last 100 years, which is not the same with gold. It's not the same with silver. It's not even the same with 2x4s and wood. Even that's held its value better. So when you look at it, the US dollar is a manipulated tool that's weaponized against the people. That's what inflation is. They're adding more of these things to the system, and so the value of it falls. In the case of adding dollars, when they're adding more of them, it now takes more of those same dollars to buy the same ounce of gold. Same with a house. Is housing going up, or does it simply take more dollars to buy that same house? I mean, the cost of materials changes and so on. However, that's what's happening with inflation. The Federal Reserve tells us that year over year, they want to hit 2% inflation, and we know that it's way higher than 2% now. But if we do hit 2% inflation, that means year over year, you're losing 2% of your money. Let's say that you have $100,000 in the bank, 100,000. Year over year at 2% inflation, that means that your 100,000 next year is only going to have $98,000 of purchasing power. So if you're putting $100,000 away for your future for your kids, year over year, how many years is it going to take before the purchasing power of that 100,000 is literally down to 50,000? What, 20 years? Or it's going to be less than that? And that's if it only stays at 2% on a year over year basis. So the purchasing power of the dollar is going down. That's why the cost of gold is going up. And the same thing is happening with Bitcoin. All of this is about people being scared of the US dollar, being scared of fractional reserve banking in general. In other words, money that's not backed on actual commodities. And so our leaders have a plan for this. They passed the Inflation Reduction Act, which injected something around $3 trillion into the economy. They took where we were at with inflation and then they just put it into hyper mode by adding another $3 trillion, which is the opposite of what you would want to do if you were lowering inflation. And so imagine that you are going to the gym to work out and you have a trainer. And so you go to the gym and the first thing your trainer tells you to do is tells you to put on 100 pounds. And you're like, what? And the trainer's like, just trust me, just put on 100 pounds. So you go and you start eating and you put on 100 pounds. Then over the course of the next 6 months, the trainer, through working out at the gym, helps you lose 50 pounds. And then they hold it up to you that, look at this, we helped you lose 50 pounds. And you're like, yeah, but you had me put on 100 pounds. This is exactly what happened with the Inflation Reduction Act. They had us put on $3 trillion worth of fat, worth of pulling the purchasing power of the US dollar down. And then they're like, well, what we're going to do is we're going to do an interest rate cut and, we're going to do some trickery at the Fed and we're going to bring it down some. And so they take it from this insane high of them adding 3 trillion down by a tiny little bit. And now they want to throw a party because they've done like the tiniest little bit and the economy kind of sucks worse than it's ever been before. That's crazy to me. What we really need is we need to cut inflation by having the Federal Reserve be backed up by gold. After all, the rest of the world is switching over to a new financial system called BRICS. BRICS is an acronym for Brazil, Russia, India, China, South Africa, which is a new financial system that those 5 signatory nations have put together. And since then, many other nations have come and they are now applying to be part of this BRICS coalition. They're talking about having a common currency and having that currency be backed on some type of commodity, maybe even gold. In America, our central bank, the Federal Reserve, is talking about creating a CBDC, which is a central bank digital currency. And a CBDC would take the already out of control inflation we have and put that into hyperinflation. It would allow them to add, just by clicks on the computer, even more money to the system. It would allow them to be able to control the money in a very strange way. The CBDC is also another example of a fiat currency, of a currency that's not based on anything. The US dollar used to be based off of a specific weight of gold. A US dollar and the note that it was corresponded to a specific weight of gold in the treasury. Same thing with a $20 bill, $100 bill. All US dollars were chained to a specific amount of gold, and that is what would hold a money system in check. But as we know, in the 1970s, they did away with this gold standard. And after that, and you can see on the chart, the price of gold just rose really quickly over time. And so gold has shown to be a very stable store of value, as well as a good investment in terms of generating a profit. So for me, what the most important thing is about actually being able to convert my US dollars to a store of value that's not constantly changing. It's not constantly going to be going down. The value of the US dollar is constantly going down. And over time, as you can see in the chart, the value of gold has continued to go up and up and up and up. Now, it might not be like the stock market where in terms of making massive profits in short periods of time. However, it is a sound store of value over a long period of time. Bitcoin could potentially be the same thing. But the thing about Bitcoin is that there's only a specific amount, a finite amount that they're going to add. And they will never add more of that according to the Bitcoin charter. And so if that's the case, then the Bitcoin charter itself will hold Bitcoin from having massive amounts of inflation. It can't have inflation because they're not going to add more. And that's the problem with the US dollar and with other fractional reserve banking systems, such as the euro, is that when you can continually add more, the value of it goes down. We shouldn't have an inflation rate at all. The Fed tells us that we should have a 2% year over year inflation rate. Why? That means 2% of your wealth is being stolen year over year, and they openly tell you that that's their target rate. That's crazy to me. So I hope you enjoyed this analysis. And if you're interested in knowing where I get my gold from, go to the comments area. And also let us know if you have any special mints or places that you like to get your gold from, because we're all about sharing and learning here. And I hope that you got a lot of value out of today's video. If you did, go ahead and give us a like. Thank you so much for joining us.